Hello everyone and welcome back to Agency Crypto. My name is Ben. Today we're doing a full no hype breakdown on Hype. And of course that's the native token of Hyperliquid. If you're already holding or you're thinking about getting in, then this video is for you. We're going to cover exactly what the project does, who's behind it, the tokenomics in plain English, how it stacks up against the competition, and the real advantages that have made it one of the biggest players in on-chain perps right now. So let's get started. Let's start with the basics. Hyperliquid is a high-performance Layer 1 blockchain built specifically for decentralized finance, and its flagship product is a fully on-chain perpetual futures exchange. Every order, every cancel, every trade, and every liquidation happens transparently on-chain with block times under 1 second. That means it feels a lot like a centralized exchange in terms of speed and execution, but it's completely decentralized and non-custodial. You can trade over 100 perpetual markets plus spot assets, and the whole thing runs on its own custom chain called Hypercore, which handles the order books natively. They also have Hyper EVM for more general smart contracts, so builders can create apps that tap directly into that fast liquidity. The vision here is simple: create an entire open financial system on-chain where liquidity, trading, and user apps all work together without the usual DeFi friction. And in practice, that's exactly what's happened. Hyperliquid has been consistently doing $8 to $12 billion in daily perp volume, often holding around 70% of the decentralized perpetuals market share depending on the week. That's not small numbers, it's real trading activity from hundreds of thousands of active users. Now, who's actually behind this? The founder is Jeff Yan, a Harvard-educated guy with a background in physics who started building trading tools years ago. He and a tiny team, literally around 10 or 11 core people at Hyperliquid Labs, bootstrapped the entire thing with no venture capital raises. They funded development from their own trading profits and kept the operation extremely lean. Jeff has a reputation for being low profile, product obsessed, and very focused on integrity. No big marketing campaigns, no pre-sales to insiders, and a clear community-first approach. That small team, no VC model is pretty rare in crypto, and a lot of people point to it as one reason the project has stayed so focused on actual user experience instead of hype. Let's talk tokenomics because this is where a lot of investors want the details. The total supply of Hype is capped at 1 billion tokens. As of late March 2026, circulating supply sits around 240 million, which gives it a market cap in the 8 to 10 billion range depending on the exact price. It's been trading roughly between $35 and $40 lately. The allocation breaks down like this. About 39% is earmarked for future emissions and community rewards. 31% went to the initial Genesis distribution, 24% to core contributors, 6% to the Hyper Foundation budget, and the rest to small community grants and initiatives like HIP2 for liquidity. The team tokens are on a 24-month linear vesting schedule, so we've been seeing monthly unlocks, things like 9 to 12 million tokens in the January through March window. These unlocks do create some sell pressure in the short term, but the team has been disciplined about not dumping large portions, and the market has absorbed them so far. What actually drives demand for Hype? A few key utilities. First, it's the governance token. Holders vote on Hyperliquid Improvement Proposals, or HIPs. HIP3, for example, introduced permissionless market creation. If you stake 1 million Hype, you can launch your own perp market, set the parameters, and earn up to 50% of the fees it generates. That's a big deal for long-term alignment. Second, Hype is used for staking to help secure the network via proof of stake. And third, and this is probably the most powerful part, 97% of all protocol revenue from trading fees goes straight into an assistance fund that programmatically buys back and burns Hype or adds to protocol-owned liquidity. When daily volume is high, that creates real deflationary pressure. In peak months earlier this year, we saw millions of tokens removed from circulation in a single month. So the more the platform is used, the more Hype gets taken out of supply. That direct revenue to buyback loop is one of the strongest tokenomics designs in DeFi right now. On the competition side, the main players in decentralized perps are DYDX, GMX, Avo, and a few others like Vertex. Here's how Hyperliquid stands out. DYDX also uses an order book model, but it runs on Cosmos with Ethereum settlement, which means higher gas costs and slower finality for most users. GMX is built on an automated market maker, AMM liquidity pool model, simpler for passive LPs, but you don't get the tight spreads and deep order book precision that active traders want. AVO is similar in trying to bring a sex-like feel, but it's much smaller in volume and user base. Hyperliquid's edge is that combination of fully on-chain transparency plus centralized exchange-level performance, sub-second finality, zero or extremely low gas fees on trades, advanced order types like TWAP, and some of the tightest maker-taker fees in the space, around 0.015% maker and 0.045% taker, with rebates possible at high volume. It also supports up to 50 times leverage on many pairs, plus non-crypto stuff like Forex and even indices. The custom L1 was purpose-built for high-frequency trading, so slippage and execution quality are noticeably better than most other DEXs. Plus, the permissionless HIP3 builder markets open the door for way more innovation without waiting on the core team. All of that has translated into real numbers, way higher daily volume, higher TVL, and more active traders than pretty much any other perp DEX. A lot of people who switched from DYDX or GMX say they simply never went back because the trading experience is that much smoother. Of course, no project is without risks. The ongoing token unlocks are the biggest near-term watch item. They're predictable, but they can create volatility. Broader crypto market sentiment still matters a lot. And while the revenue buyback is powerful, it only works if trading volume stays strong. Regulatory uncertainty around decentralized exchanges is always in the background too. On the positive side, the team has shown they're willing to adjust things based on community feedback. There have already been proposals around supply burns and staking rewards to keep incentives aligned. So, bottom line, Hyperliquid isn't just another perp DEX, it's a high-performance financial infrastructure layer that's actually delivering the speed and usability most DeFi traders have been waiting for, paired with tokenomics that directly reward usage through aggressive buybacks. If you're already in Hype, the data shows the platform is still growing its dominance in on-chain derivatives, and the revenue mechanism gives holders a real stake in that success. If you're researching, the combination of real product-market fit, a battle-tested small team, and user-aligned economics is what stands out.
And that's the full breakdown. I'd love to hear in the comments where you stand on Hype. Are you holding through the unlocks? Are you still on the sidelines? Drop your thoughts below. And as always, none of this is financial advice. Always do your own research and take responsibility for your own results. Now, if you want my personal analysis and projections on the potential upside of Hype and where it could go, that video will be in our Discord and that link will be in the description below. So join the agency now while it's still free. My goal with the Agency Crypto brand is to create one of the best crypto communities in the space, so if you want the benefits of that, then find the Discord link below and join the agency. Whether you're looking for like-minded people to talk crypto with, the best new tokens before they take off, deeper analysis like where will this token go and how do I trade it for the most profits, or educational content so you can improve your skills and have a chance to make the bigger money, you'll find it there. I've been in the market since 2009 and I've been fortunate enough to make multiple millions with crypto, and I know that there are methods, skills, and mindsets that can make all of the difference between someone succeeding or failing here. There's no cost to join now, but each Discord link only accepts a limited number of new people. Once that quota is reached, you're going to have to wait for the next link that'll be in the next video, so don't wait around. And of course, if you want more deep dives like this, hit the like button and subscribe so that you don't miss the next one. I'll see you guys in the next video. Take care.
Join the agency if you dare.
Join the agency, feel the